The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 19th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start this morning. Let's make sure we do all that we can do to have an extraordinary day. Now, my outcome during the next hour, well, it's to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs, the words of wisdom brought to us by our extraordinary producer, Al. And he makes everything that I do seem so seamless, and I know that it definitely is not. Now, Al and I start our days with the following incantation. I think you should as well. And it starts off by this, like this. Says, hey, watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become your habits. And watch your habits, for they become your character. And then finally, watch your character, folks, for it becomes your destiny. Well, let's go check out the destiny of the markets out here right now. Dow is off 2 points, so we got a flat market out here after a nice day yesterday. S&P up 45 cents, a flat day out here. Nasdaq Composite down 3 points, a flat day there. Russell 2000 up 63 cents, a flat day there. NDX 100 off 2 points. New York Stock Exchange up 20. Oh, not flat in the metals marketplace out here. Goldilocks up $21. Silver up 42 cents. Our call number's 877-927-6648. Give me a call, folks. Happy to go take a look at your stock chart. Where do we begin our day? Let's go take a look at the ETFs out here, because we can take a look at market profiles. So let's go do that. Give me a moment. I think that's all. Okay, there we go. This is the area where I've got it. So let's take a look. We can take a look at the ETFs. We can take a look at the sectors within inside the S&P 500, get some ideas for what is going on inside the marketplace out here. Now, let's start off by taking a look at the Qs. Let's look at it on a daily time frame out here. Yesterday, the Qs moving higher with volume. That volume taking us into a swing point. A swing point, its most recent swing point, that occurred on June the 11th. That high was 93.02, 22 million shares. Yesterday, moving up into that with 34 million shares. 93.02, that level here has been tested this morning. It's been tested so far. Volume in today's trading session is 3.6 million shares. It's market profile. It's resistance level. If you're bullish, it's an area that you want to see price close above. It is really trading right at it right now, which is like about $93 and a penny out here. I don't even know if I can get it because it's sitting right behind it. I don't know if I can even get it out there. So it's sitting right at the $93 level. If, in fact, it can't bust it up to the upside out here today, what it says is that we ought to see a pullback into about 92.31. 92.31-ish would be your... And you'd like to see it pull back in there with less than 35 million shares. I'm looking at the trading session from June the 12th out there. Now, that's what's going on the daily basis for the Qs. Let's take a look at the weekly time frame for the Qs as well. Let's go take a look at their market profiles. Their market profile shows that it's on a weekly basis already busted out above its resistance level. Old resistance should become new support. So if, in fact, the markets are unable to bust things out to the upside, that really signals that you'd be looking at 90.55 as your first area inside of support for the Qs. Old resistance should become new support. So on the weekly, 90.55 on the daily, and that's its unfair high, its resistance, and the unfair low on the daily basis, that comes in at about 92.31. That would be the range. Likewise, if it closes above today, 93.02, and I don't really mean 93.03, but it still would qualify. If it can close above 93.02 with more than 22 million shares, now you've got an A to B equals C to the upside. You've got another A to B equals C to the upside. And inside of inside of the Qs out there, that could be a doozy. Let's take a look at the 1.272 retracement. We'll take a look at a couple different things. So from a retracement level here, let's go measure its next move on a break above, well, the 93.02 level. What I'm going to do is I'm going to come back to the time frame of March 7th, March 6th. Let's see, March 6th, the high is 91.33, 91.36. That's the high from March 7th. And we're going to look at expansion of that swing point down to the low that was put in on the trading session inside the Qs. That was on April 15th. And that, oh, geez, I did it again. I gotta get used to that. So let's try that one more time out here. Let's see if I can create a little bit of magic here. Let's go find that expansion. There we go. Okay, great. Now we're good. The 1.272 expansion says 93, gives you a price projection, 93.56. So 93.56 may prove to be an area of resistance for the Qs. The expansion, the 1.618 level, is 96.35. So first, the Qs today would need to break above their unfair high on the daily chart. And if they can do that, they can get above 93.02, do it with more than 22 million shares. That's setting up, an A to B equals CD. If I use the most conservative A to B equals CD pattern, I'd almost really come all the way back down here. I'll just use the very small one. That's going to be June 4th. And when I say small, I mean that's a real small one. And it's probably not even one that I would teach, but let's use it anyways as your A point. Your B point, we've already identified that. Your C point happens to be on June 12th. And the 1-to-1 out there would take you to the 93.94. So a break above unfair high, the resistance level, brings into play 93.56, 93.94 as a likely move inside of the Qs. Let's go take a look at the IWM, the Russell 2000. It's trading up 1 penny right now, 117.77. Russell 2000 is well above its unfair high, well above its resistance level. That's 116.84. Yesterday, taking out a swing point, June 9th, had volume of 44 million shares. Ta-da! Yesterday, doing it with 37 million shares. So you got light volume as its most recent swing point was taken out to the upside. If we do take a look at A to B equals CD patterns inside of the IWM, your A point is going to be the hammer low on May the 15th. Your B point is going to be the high of May 27th. Your C point is going to be the low on June 3rd. 1-to-1 A to B equals CD is what it formed yesterday, but with only doing a 42% retracement, it really suggests that it eventually wants higher price out there. That next level inside of the IWM would be 119.25. That's your 1-to-1.272. But hey, let's face it, if it gets back there, what it really wants to do is it really wants to get back into the March 7th swing point. That high is 120.41. The low is 119.03, and that's where the IWM wants to move to. If we take a look here at we took a look at the Qs, the IWM, let's go take a look at the SPYs. Trading up 6 pennies at 196.32 right now. Let's go see what it is doing. It is up above its unfair high. That is the 195.64. That means it's up above resistance. That says if we take a look at the SPYs, their most recent swing point was also on June 9th, 65 million shares there. And what did it do yesterday? 105 million shares. There is a confirmed A to B equals CD to the upside inside of the SPY. If we take a look at the small one out here, let's use the real one, the most certainly real one out here. Your A point on that, one that I would use, is down here on May the 15th. That's going to be your A point. Your B point is going to be the swing we just took a look at. That is June 9th. Your C point was moved down into the June 12th area. And that's a doozy of an A to B equals CD, because that brings into play 202 over 2,000 inside the S&P 500, or 205, your 1-to-1.272. So you've got a confirmed A to B equals CD so long as the SPYs are able to stay above resistance. Oh, I got to push the right key here. Stay above resistance, which is 195.64. That is going to be bullish. Of course, it is making a higher high. It is doing it on less relative strength, but we do not have any kind of reversal signal, at least not as of yet. Let's go check out the Dow Diamonds, the DIA. Trading up 15 pennies right now at 169.08. What are the Dow Diamonds doing on the daily chart? They're above their resistance level, their unfair high. That's priced out at 167.78. That should become support on any moves down. What the Diamonds are doing is they traded into the swing point here from June the 9th that had 2.7 million shares. They traded into it yesterday with 4.7. So coming into a swing point with volume, that says what? but it says that the high from June 9th ought to be tested. That high is 169.58. We have not seen that test here just yet. Any move lower ought to find support at 167.78 or ultimately 166.88. But right now, all things point to a market that wants to move higher. Should move higher. You've got the VIX index. So let's take a look at a couple other things here that I will show you. Let's take a look at the VIX index and go see where that thing fell off planet Earth yesterday. That means it's well below. And that 50-day exponential moving average inside the VIX. Boy, has that been a beauty with regard to how that is held as resistance out here. So you got the VIX trading slightly lower today, down at 1045. Look at that red squiggly line on my screen out here. The 50-day exponential moving average acting as a resistance level ever since April's the 16th out here. We saw 4 days trying to test that area, was not able to bust it up. Now it is more than busted it down by getting below the swing point out here. Not that it really matters, the June 6th area. As long as the VIX index trades below the 50-day exponential moving average, you're going to have a market that's going to either move sideways or move higher out there. Now, here is the interesting chart, what I consider to be interesting. Now, it's a little bit too early. It's only the 19th, so we still have another 11 calendar days left in the trading month out here. I don't know what that works out to as trading sessions, but it's 5, 6 for sure, right? Maybe a little bit more than that. But let's take a look at just. Give me a moment here. I'm just trying to find it right here. This is the NASDAQ composite. This is what I wanted to show you. So the NASDAQ composite, if you take a look at this chart out here, it's pretty interesting, really. When you take a look at cycle patterns, this has got the 23-month cycle pattern out here. That 23-month cycle pattern that I'm using begins back in October of 2000. And what I found in this cycle pattern out here is that it identifies significant highs or lows when the cycle hits. Now, April of this year happened to have been the next 23-month cycle. And at this stage here, what we can conclude, even though the market is extremely over, this is a monthly chart, monthly chart we're looking at, is extremely overbought. Nonetheless, it can stay extremely overbought for some period of time. Right now, that low is very important. The low that was 39.4603 the month of April. Because that's one element of the chart. There was also a consolidation period that went on from the time period of January in 2001, and we didn't see the final breakout of that back until November of 2012. So you got a 12-year consolidation that it broke out of, gave a measured move up to the 4,400 level. You're at 43.61 right now. But what I really wanted to show you, and the number that you want to write down on a pad of paper out here, you still want to be taking a look at this as we come into the end of June out here, is 43.5569. 43.5569. We're trading at 43.60.19. We get back from the break, I'll tell you what that number represents. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, to the Barefoot Water Ski show that is going on inside the markets out here. Nice, flat glass surface. Of course, that makes barefoot water skiing a whole lot easier out there. The Dow's off 2, S&P's down 48 cents, NASDAQ off 6, little ripple out there. The Russell 2000 off 80 cents right now. I want to go back out to the composite chart, and most importantly want to pay attention to where the month ends here. When they gave you the number 43.55.69, that happens to be the exact low of the swing point from March of 2000. That is the swing point. It's a monthly chart we're looking at. That is the swing point high out here. That's the all-time high. And it closed inside, when you close inside a swing point, if in fact that's what happens, close inside 43.55. That brings with it the promise of going up and testing the highs out there. So it's an area for us to watch. Now, on a weekly chart, a little different prices out here. If I take a look at the weekly chart and go back to the March 2000 time frame out here, let's take a look at what that weekly swing point is, because that, in essence, would really be your target. So if you fit inside, if you close inside the monthly, then what I would do is come down to the weekly and say, okay, where's the weekly swing point? That would be the likely target area next, and that's going to be the week ended March 10th, 2000. The low there would be 47.22 out there. So those are numbers you want to be paying attention to. And not saying that we are going to get there, but if you do, if we just simply take a look at a stock chart, we don't concern ourselves with what it is that's behind there. Just simple, normal charting tools out there, then that's what we would be looking at inside of the NASDAQ composite out here. So kind of pretty cool stuff. Of course, here's the NASDAQ composite, the rising price channel on the weekly basis out here. a nice rising price channel, and even though it's bumping its head up against resistance here, whether or not that really holds, to me, when price is moving up, the upper boundary line of resistance, that can continue to move higher. It's not a breakout because price is already moving higher out there. Now, let's go see what are the markets doing here. Is yesterday's move the beginning or the end? The beginning or the end? Is the market exhausted? Yesterday was a tough day for me because doing the radio show, and I had, apparently from eating chicken the night before, there were some feathers that were on that bird out there, and so I had a very feathery throat out there. And the last thing you want to do is do a show where you're coughing. I mean, kind of disrespectful to you, the listeners. Of course, I didn't really have much choice. But I did get some rest, tried to get some rest yesterday, mostly because I was exhausted. So the exhaustion move, that's the possibility that's really what took place yesterday. I won't really know until we see how today's action falls out here. If we take a look at a 30-minute chart, though, and this is for the S&P 500, the 30-minute chart shows that a price relative strength divergent pattern that is unfolding as we speak right now. That's where price makes a higher high, does it on less relative strength, and with that brings the promise of a retracement out there. How deep that retracement is, well, we just simply have to watch volume as it picks up. Of course, what we're always looking for is we're looking for a signal. We're looking for a signal, and we did have a little bearish engulfing candle that is formed here as we came on to the 10 o'clock time frame. A further close lower would be confirmation of that signal. And then your question should be is, hey, where would price pull back to? So let's go take a look at, I'm going to pull up a little different tool out here. Give me a moment to switch charts. We'll take a look at this on several different time frames. So the pattern has not confirmed just yet. Well, it's confirmed with that bearish engulfing candle, but I always like to have a second opinion. That means I want to see the next candle confirm what it is that we're looking at out here. And so it says as we got 2 minutes, really, for that to confirm. So it looks like it is going to. Let's go back and take a look at, give me a moment here to go back to the current September contract for the ES. And we're going to draw some easy retracement tools and take a look at, see where price could take us down to. So let's put, this is the, that was a 30-minute chart we were looking at. So I ought to change over to a 30-minute chart. Let me just do that, because we might find some different swing points that we would use out there. So ESU 4, and then we'll go down to a 30-minute chart out here, and let's go see what we can find. All right. Number one, what do we know about the ES Mini on the 30-minute time frame? Let's go ahead. Let's get rid of the volumes out here. I don't need to look at those live on the screen. If we just simply take a look at the last swing point out here, that's going to be the Janet Yellen celebration. Took place, began between 2 and 2:30 out here. We're going to use that low as the swing point when price got down to the 1929.25 level. So I'm going to go from that low to the high out here that took place as the market opened between 9:30 and 10 o'clock as price got up to 1952.25. The dead cat bounce, the 0.382 retracement, just simply a normal move takes you to 1943. 1938 is the 0.618 retracement. And moving all the way back to 1929, that would just simply be, if it comes back on light volume, coming back to a breakout. 877-927-6648. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Nothing really changed here in the markets as we speak right now. A flat market out here, flat trading session. You know, the 30-minute chart we were looking at in the ES Mini, that certainly has confirmed a price relative strength divergent pattern. And we looked at a couple of different areas where price could pull back to. Those are places that we'll want to go ahead and continue to monitor. I would think that if price really pulled back, that 1928 area, again, same area we were looking at yesterday, which is really the breakout from yesterday as well, would be the, and if it was 1929.25, ought to be a level of support out there. If I take a look at a little bit longer-term price channel out here, this 120-minute time frame chart that we're looking at for the S&P futures, what we'll see here is you'll see a nice little rising price channel that began back in April 11th out there. And so price traveling with inside that until that level gets pierced to the downside, you can expect the uptrend to continue. And you can see here on the 120-minute time frame, if you're watching this on Tiger TV, how price just simply has gotten into the overbought condition and needs to just work that off. And it's going to do that either by moving sideways or going ahead and pulling back to one of those retracement areas or maybe the actual breakout level. So that is what we want to be watching inside of the S&P futures. Let's go take a look at some stocks that are moving this morning to the upside, to the downside. Let's take a look at Tesla. Let's go take a look at Tesla. TSLA is a ticker symbol, up $7 this morning. Let's go see what it is doing out here. Now, Tesla here taking on a recent, let's see, where's their resistance? See, here's the thing with Tesla, it's got a it's got a high with volume out here. It broke out. This was back on trading session of February 25th. Now that volume was 32 million shares, but the very next day did 24 million shares as well as it made a high. The low of that candle session, that swing point, which is February 26th, is 247.50. So it's headed to 247.50. Let's take a look at the B point of an A to B equals C to the upside. B point inside of Tesla is going to be your swing for May 30th. That had volume of 5.5 million shares. That was met with some intense buying on the trading session of June 16th. Wide price spread, accelerated volume, passing the B point of an A to B equals CD to the upside. So let's go measure that. Let's use our A to B equals CD tool. Let's measure price projection. So low is going to be May 9th, or A point, I should say. The B point is going to be the swing out here from May 30th, and the C point is going to be the low that came in on June 11th. 1-to-1 A to B equals CD. You can see that price is at 236.83, and that is close to being hit here as we speak today. But with the volume spread, the wide price spread, accelerated volume, in essence, coming off that C point on June 16th, 13 million shares on that day, 13 million shares the next day. Yesterday, only 6.9 million shares. It offers the promise of moving up into the next level. It wants to take it to the next level. It is in the overbought zone. You can see that took place here on the trading session of June 17th. So don't be faked out if Tesla just kind of pauses here for a bit, pauses to refresh in order to go take on its move up to its next level, which is very likely the 247.05. But really, when it gets up to there, it's the low is 247.50. The swing point of February 26th has got volume. That is where Tesla is headed to. And if you can take that out and do it with volume, or if it's coming in there with more than 24 million shares, that's going to set up some real momentum to the upside inside of Tesla. So well above any kind of resistance. You've got a confirmed A to B equals C to the upside on its daily time frame and chart. Let's look at the weekly time frame and chart, see if there's any different message here. The weekly says, hey, we're already inside that swing point. So the weekly chart is already confirming that it wants to go test the March 3rd level out there. Weekly, though, it has 98 million shares. You're into it with light volume this week here, only 37 million shares. And that is inside of Tesla. 265 is its resistance level. So, if it can close above that, and it can do it above with more than 98 million shares, that will give you a huge A to B equals C to the upside. But that's going to be a tall task. What we could see here is Tesla trade in a consolidation range between 265 and 175 out there. Not a bad trading range. TSLA is the ticker symbol. Let's go take a look at, let's see here. What do we have moving? Let's look at Wynn Resorts. WYNN is the ticker symbol. Let's go see what Wynn Resorts is doing. It's pulling back this morning, but it's testing its level of support. Its unfair low, which is priced at 194.27. It hit 194.73 here this morning. Yeah, that was the low. Bounced off of that area. Let's see. The swing low is April 28th. Volume down there, 14 million shares. So far this morning, it's done 4.3 million shares. Looks like just simply a bit of a consolidation that you've got going on inside of Wynn Resorts. Again, this is a weekly chart that we're looking at. So it's weekly. Maybe it didn't hit it today. It must have hit it today. The weekly chart shows a consolidation between 195 and 229 out here. Let me go take a look at the daily chart now, see what kind of volume we've got here today. So it was yesterday when it tested that low. So Wynn Resorts finding some resistance at its daily market profile, unfair high level, and that's really right where it's trading at right now, which is right around the 203.39. A break above that would be bullish. Of course, this thing had a little bit of a gap down on the trading session of June the 9th out there, volume-wise, was 2.5 million shares to the downside. It's already done 683,000 shares today. So, is it going to find resistance at the bottom of this gap? It may. That level happens to be out at 204.07. If it can close inside 204.07, it carries with it the promise of higher price. That is on Wynn Resorts, WYNN. Is the ticker symbol. Let's take a look at that Priceline, see what it is doing. It's off $11 right now, off about 1 percentage point. Let's see what Priceline is doing. Now, Priceline here looks bearish, not bullish. So with the market moving higher, Nothing really bullish here about Priceline. On the daily chart here, traveling below its unfair low. That says to be neutral or to be short, but not to be long. If we take a look at, is this the A to B equals CD to the downside, the B point being the June 11th low with volume of 748,000 shares? Well, looks like it is, and that says an A to B equals CD to the downside. So the price projection inside of Priceline ought to take it down to about the price area, the 1-to-1. Well, it already hit that 1-to-1, but which was 11.85. But like the way that it's trading here, looks to me like it wants even lower price out there. And that lower price, for the most part, takes you down to this high volume low. Yeah, I mean, that's what Priceline wants to do. It wants to get all the way back into the May 8th area. Now, the price range on that is pretty wide. You're talking 1,087 up to $1,153 out there. But that is where Priceline looks like it wants to head to. Let's take a look at Amazon. Let's go see what Amazon is doing. It's off $5, announcing a new phone yesterday. Had a little bit of a pop, but that pop ran into resistance. Its unfair high, which is priced at $337.03. Couldn't bust it up. Question is, will it try to bust it down? It's not bearish, but it looks like it's going to try to make a run for the 322.28 level. That is what's going on inside of Amazon. Let's take a look at any A to B equals CD. So if Amazon can get above the swing point that it's dealing with, which is June 11th. That's got 4.4 million shares. That price high is $340.72. If it can break above that, after it rests, after it comes back to the unfair low out there, or whatever it does, if it can break above that with volume, that'll set up an A to B equals CD, the upside inside of Amazon, with the low being May 9th, your B point being the high of June 11th, and the C point being down here, looks like June 13th is 323.53, 323.52, the following session, June the 16th. That would give you a price projection up into the 379 type area, but first it has to clear 340.72, and it has to do it with volume, meaning more than 4.4 million shares. That is what's going on inside of Amazon. A quick peek in at Netflix. Let's go check out Netflix. That has been on fire out here. NFLX is the ticker symbol, off about $3 here as we speak this morning. Let's pull this back out here. This thing here is just simply, forget the A to B equals CD pattern, because it's just simply done, looks like maybe it's doing a 1 to pi, 3.14 and so forth. Extension out here. Let's go see what else Amazon or Netflix is running into. Let's go take a look at swing points and expansion. So here we go. Netflix. I've got to get Amazon out of my mind. The swing point high looks like March 6th, 458 even Steven. Yeah, that's it. So the low, which it's already testing. So it's testing that swing point, March 6th. That swing's got 1.7 million shares, 1.689 to be exact. And yesterday's test was up there with 2.6. Hey, how about that? So Netflix is signaling to us that it wants to go test that swing point high, possibly break it out. So that swing point high, 457, 455. No, I take that back. The actual swing point high is February 25th out there, 2.6 million shares. Let's make sure I use the right swing point. That is at 457.79. I take that back. Let me reverse. We are back to March 6th out there. So it's moving into that swing point with volume. That says at that high, 458 even Steven is going to be hit. Now that's forming a potential double top out there, and if it can't bust it up, but it's coming in with volume, it's at least going to go test it. If it can't bust it up, well, then it will try to bust it down. But bust it down, its first level of support ought to be 406.55. Let's put this on a weekly time frame out here. Netflix, nice and strong. The weekly time frame shows volume. I want to see what volume at that swing point looks like, because we came into it on a daily basis with volume. On a weekly basis out here, we're looking at volume of 8.6 million shares. The week ended March 3rd. This week it's done, 9.6. So, folks, if Netflix takes out that high, that'll set up an A to B equals CD pattern. And if it cannot take it out, it sets up a consolidation. The consolidation says it can run all the way back down into the $299-ish level, $445 stock out there. But if it does take out that high, it's coming in there certainly with volume. That'll be one heck of a large A to B equals CD to the upside. I mean, large. Very large. In any event, let's go take a look at what else do we have that's moving out here. Let's see, percentage-wise, you got KBR Inc. KBR is the ticker symbol, and you got China Mobile, both down 10 and maybe higher percentage, but 10 and 14%. But if we take a look at KBR, that is KBR Inc., construction industry. Let's see what it's doing. So this morning here, moved down, tested the, trying to get down into the unfair low, trying to break that area, which is at 22.78. It's important for that area to hold. Really, the area that it needs to hold is the swing point, which is May 19th, the low of which is 23.40, and a volume of 7 million shares. Now, you're coming into it this morning with volume, not good. 9.8 million shares. So it's moving into a swing point with volume out here. Not a good scene inside of KBR. Let's pull this back further. You can see it's really been somewhat of a consolidation zone out here. I'm just looking. That's the weekly chart that we're looking at. Let me just come back to the daily. Sometimes I forget that I'm on a weekly and versus a daily. So it's gapping down this morning. Let me pull this. Take a look at its A to B equals CD patterns out here. So it looks like several of them. One of the A to B equals C. Let's start with the first one. Let's build these. Your A point out here, trading session of October 22nd. The B point is the trading session of December 18th. It's low. The C point, the January 15th high. Makes the 1-to-1. A little bit of bounce, no bullish reversal. 1-to-1.272 makes it no bullish reversal. 1-to-1.618, it makes that, and it did get a bullish reversal signal out here. It says the next level for this equity is about $20 and a penny. Right now trading out at $23.74, and on a daily basis here, it is taking on the swing point low, and it's doing it with volume. So it looks like that is where KBR wants to run to. Let's take a look here at something to the upside. Let's look at Celgene, up 3% here this morning. CELG is the ticker symbol. Let's go see what it is doing. Trading out at 166.04, up above resistance, up above a swing point. Let's see if it's taking down that swing point with volume. Happens to be the trading session of June 10th. 2.1 million shares are there, and it has already accomplished, has already traded 1.1 million shares here this morning. So it looks like it does have volume as it passes a B point. Now, that's been a nice little stair step on the way up out here. It's up above resistance. It's trading into the swing point high, which is the trading session from January 13th. 7.8 million shares there. Gapped up so far this morning, done 1 million shares. Looks like volume is going to be a little bit light, but it's inside that swing point. You should expect Celgene to go test the 174.66 level. That is its swing point high from January 13th, 2014. Right now, we've got the Dow up a buck. The S&P up 50 cents. The NASDAQ Composite off 2. Russell 2000 off 20 or up 28 cents. A very, very flat market. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Still really flattish market. Dow's off 11 points. No big deal out there. All slightly red across the board. S&P off 70 cents. NASDAQ off 5. Russell 2000 off 69 cents. NASDAQ 100 and the X100 off 4 points. Not the same is not true in the gold and silver market. Gold's up $23, almost 2%. Silver's up nearly 3%, up 2 7/10%. It's up 54 cents as we speak right now. And light sweet crude has decided to join in on the fray. It's now up 23 cents. It's trading out at 106.20 out here. So what is it that we should expect? Well, first, yesterday had enough market breadth in order to push the New York Stock Exchange into a full bullish mode. That's for sure. So the summation index turned up out there. That is bullish. The VIX index, we know that's trading well below the 50-day exponential moving average. Let's go take a look at both those first two out here. And I don't have the New York Stock Exchange chart updated, but as far as the summation index, but you can trust me on that one. The New York Stock Exchange yesterday also took out the swing point high. That was the all-time high from June 9th out here. So when we take a look at the New York Stock Exchange, what we must always consider out here is that the New York Stock Exchange is now broken through its consolidation pattern out here. I'm going to move over and show that to you. This is a long-term consolidation pattern. It's a 6,000-point consolidation pattern. It says that what the New York Stock Exchange wants to do, so long as it stays above the level of October of 2007. That's 10,387. That it offers with it the promise of 16,000 in the future. So, the final index that get over the 2007 highs is the New York Stock Exchange. So the future bodes well at the moment out here. On the daily time frame yesterday, we saw the highs get taken out. We saw price get above, or we saw the price oscillator move back above zero. That all looks good. Right now, today, as we speak out here, you've got net advancing issues, 1617 versus decline at 1259. So that is still positive out here. So that looks pretty good. If we take a look at the VIX index, you can see here that, or you will see here momentarily, you'll see the VIX index trading well below the 50-day exponential moving average. So long as it does that, you've got a market that wants to move higher to sideways out here. And right now, we've got a market that's it's moving sideways out there. The VIX right now trading at 1063, 1252, being the 50-day exponential moving average. Of course, we've got the currency pair, our favorite currency pair, Euro-Japanese yen. That's moving higher. It's above the 0.382 retracement. It offers the promise of 139.15, 139.56 as its next targeted move. From a liquidity standpoint, that bodes well out there also. There goes the feather. I thought I was going to be able to make it through 2 hours without a little hacking in the throat out there. But I'm going to rest the throat up out here and... for the rest of the day. That means I'm not going to talk. And, I've got another about 30 seconds that I need to speak, or we could just have dead silence. No, I don't want to do that. Excuse me. And I most certainly don't want to do that as well. Inside the September futures contract, we have that price relative strength divergent pattern that's confirmed inside the ES Mini out here. And that's really the one that says, okay, time for the market to go ahead and pull back. We'll see what happens when that relative strength index gets down on the 30-minute chart into the 30-ish type level out there. So far, retracement very, very small. 1943 is your 0.382 retracement. 1938, your 0.618 retracement. And that would just simply be normal out there. Folks, thanks again so much for joining us today. And stay tuned. It is Terrific Thursday. It means we got a full lineup. Our man Basil Chapman is up next. After Basil, Larry Pesavento, Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show from 4 to 6. Have a great Thursday, folks. Take care and see you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.